Your market news now. Market participants are awaiting the Fed's decision later in the day, where the central bank is expected to stand pat on its interest rates. The US dollar received a boost from bets that the Federal Reserve would not slash interest rates earlier than expected due to resilient economic data from the world's largest economy. In company news, poultry producer Astral Foods says it expects to bounce back to profitability in the half year as the impact of the country's devastating bird flu outbreak and power cuts wanes. Meanwhile, discount retailer Pepco reported a 7.2% rise in sales in the Christmas quarter from a year earlier, despite the negative impact on the stock inflows from port congestion at home. To give us more perspective on the markets, we are joined by Ricardo Smith, who is the Chief Investment Officer at ABSA Investments. Ricardo, thank you so much for your time. So it's the first Fed meeting for the 2024. How are we reacting in terms of market sentiment when you look at your screen right now?
Afternoon. It's certainly, one of those much awaited. However, not looking to see any cuts in this one. I think that debate between the Fed and the markets around when those rate cuts will come through has been ongoing. And when you look at the economic data, unemployment numbers still quite low. GDP in the US, surprised positively, particularly off the back of excess savings from the COVID period. And inflation, although trending lower, remains above the US Fed's 2% target, as well as some of the geopolitical tensions and supply side disruptions in the Middle East, which is further contributing to sticky inflation. So not expecting any changes. We think rates are high enough at current levels to contain inflation, but it is remaining stubbornly elevated, and so most likely to see a cut only in the second half of the year.
With that, then, we're not expecting any changes, but are there one or two things that you are expecting him to say?
I think, the one thing will be an indication on when they see rate cuts coming through. Likely that it will be in the second half of the year, so in Q3. So that will be quite significant if that is pushed out to a bit later on in Q4. So looking to see the sentiment around everything that has been happening and whether he still sees the current rate environment as conducive for containing inflation, and how they see those second round effects as they've spread. Do they see them subsiding, or are they seeing them running away? And obviously he likely to highlight that they will remain data dependent, and so far the data is not necessarily pointing to a rate cut at this point.
Let's bring things locally. We had Transaction Capital announcing after market close the proposal to unbundle WeBuyCars with a possibility of listing it. And some may say, speaking to other analysts, saying that this is probably the first major move to try and rescue some kind of value from this growth story, which they describe as broken. The unbundling of WeBuyCars and possible listing, does this create a pure play for WeBuyCars for investors?
100%. Looking to unlock that value. The holding company is, also a holder of SA Taxi, which is at the moment, heavily indebted and at risk of default. There are some cross, default events that are in there, and so kind of looking to separate, those businesses and unlock value on the WeBuyCars. And it is, one of those that's interesting to see. There've been a bit more delistings than listings on the JSE, so always interested to find a couple of listings, although liquidity at the start at least is likely to be quite low.
So we had Astral Foods and Pepco releasing a trading update yesterday, both in different sectors of the market. But if you had to pick between the two, which caught your attention?
I think probably the Pepco, story proving a bit resilient on the growth side, despite, a consumer locally that is under pressure continuing to expand in the Brazilian markets, opening 9 new stores, expanding locally as well, changing and officializing the RIM structure of their CEO. So quite a lot of events there. Although, however, worth highlighting is their credit sales have risen from 9% to about 12%, of revenue. So most of those sales coming from credit. So one to look out for from an impairment perspective. On the Astral Food side, no real surprises there. I think a recovery from a lot of the losses from the avian flu and load shedding and the likes last year. So no big surprises, in that, and that growth in earnings per share coming from a very low base.
As we wrap up, it's the last trading day for the month of January. Is there one factor that you believe moved markets in January?
I think from a global perspective, certainly US earnings season has driven a lot of rallies, particularly in the tech sector. Not a lot of individuals or market analysts were necessarily predicting further rallies in the tech sector from what we've seen last year, but seeing some strong performance out of that region and valuations looking quite stretched at the moment. So that is one area to look at quite closely in terms of how that continues to play out.
Ricardo, thank you so much for your time. That is Ricardo Smith, who's the Chief Investment Officer at ABSA Investments. And looking at the markets right now, locally, we are weaker with the resources down 1.4%. The only bright spark is the financials up about 0.1%.